everybody. This is Toni Turner, and welcome to the market now as of Thursday. Yes, we are a day early this week. As of Thursday, March 25th at about 3:45 Eastern, right before the markets closed. Well, the Nasdaq led Wall Street lower today earlier as a rotation out of richly valued stocks into underpriced sectors added to pressure from quarter-end rebalancing by institutional investors. The Nasdaq Composite fell in March after 4 straight months of gains as positive economic projections lifted demand for undervalued cyclical stocks, but also raised fears of higher inflation and a potential tax hike. And on that not too cheerful note, let's go on and look at 3 charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now, back here on March the 17th, see that green candle? The SPY made the most recent all-time high, the recent all-time closing high, I should say, at $397.26. That's about $39.72 on the S&P 500 itself. Then it started declining from there, and Wednesday of this week right here, you can see where it actually fell below the 20-day moving average and closed below it. Today it is stretched right back up here. It didn't happen until the end of the day, but the SPY is now back up when I capture this chart at $390. And 19 cents, or 39.01 on the S&P 500 itself. So now, fortunately, it's back up above this 20-day moving average, the red line you see here, which is coming in at $388.73. It's also above the green line, the 50-day moving average, very important moving average, and that's now coming in at $386.20. This green line, people, this is an important line. A lot of institutional investors watch assets or indexes to see if they can stay above their 50-day moving average. So we're cutting it pretty close here, but the SPY is still above it, and that is positive. Now, price resistance remains up here at 398, and we do have for support down here, again, we've got the 50-day moving average at $386, and what do we have here, 20 cents. We can look if the SPY, for whatever reason, decides to roll over and start coming lower. If it goes below the 50-day, again, then we'll probably see another leg down. If so, we do have support here at the lows in February at right about 371. We have more lows here, so we can draw a pretty good support line here right at 370, 371, and know that this is pretty decent, if not exact, or I should say not, we can't say it's going to hold, but we know that right here in the 370, 371 zone, we do have potential price support. And that would come in, of course, from buyers who have purchased there before and who say when and if this happens, wow, if the SPY gets down to 371, I'm going to buy it because it held there the last time, 370, 371. So potential support here at that level. I'm also watching, as I told you the last couple of weeks, I'm watching the high volume here. This is interesting in March. And we want to know on an overall basis, of course, does this mean there's selling more sellers than buyers or more buyers than sellers here? And then we refer back to price, which has basically been going, although moving up and down basically horizontally. So that'll be an interesting thing to see how that plays out. So again, if the SPY falls below the 50-day average at 386, again, please keep an eye on your stops, especially on your long positions. So we're in a good place here, but a little bit tenuous. Keep an eye on the SPY. Our second chart for the day is a daily chart, of course, of the Invesco QQQ, symbol QQQ. This represents the Nasdaq 100, a very important index in the market. Top holdings include, of course, Apple, Amazon, Alphabet, Facebook, Intel, Microsoft, all those guys. So the QQQ back here let's see, hold on here. I'm getting ahead of myself, so hold on with me. The QQQ, of course, made an all-time closing high back here on February 12th at $336.45. Since then, it started to fall. It fell down to these lows here at about 300. Then it rallied back up. Now note here how the 50-day moving average, this green line, was support back here in February, is now acting as resistance. And the 50-day moving average is coming in at $320.98. We can call it 321. When I captured this chart today before the close, the QQQ was trading at $312.07. So it is now, it moved up from those February lows up to the 50-day moving average, could not climb over it. That was resistance. That was sellers saying no way. And so it rolled back to the downside, and again today is trading just below the 20-day moving average at $312.07. The 20 days coming in at 314, and that could act as a little potential resistance here. So right now we're treading water here. It is below the 50-day. That's not a particularly positive thing. However, the tech stocks had a fabulous run, and I'm hoping some of you took some of your profits when you saw the weakness come in. Of course, there's always opportunities out here when some of the big tech stocks or momentum stocks fall. For those who want to get back in them, don't be in a big hurry, but certainly you can look for openings. So right now, the QQQ trading below the 50 and the 20-day, got support at the 300, got more potential support at the 200-day moving average coming in at 290. Definitely, though, we want the Qs to stay above this 300 line. Lots of volume going on here, so please watch into the coming week. And again, please keep your protective stops in place. Our third and final chart today is a chart of the U.S. Infrastructure Development ETF, the PAVE. The PAVE has 101 holdings, and I'm not sure that we've ever looked at this before, but I really like this chart. The PAVE has 101 holdings. The top holdings are Deere, Parker Hannifin, Norfolk Southern, Eaton Corporation, and Sempra Energy. Has a lot of other good companies in it. And you can't see it on this chart, but after touching the March lows in 2020, the PAVE was trading, the lows in March 2020 were $9.77. You can't see that right now, but trust me on this. Since then, since March 2020, and of course that was a big deal for many stocks, and we're right, it's almost a year later now, currently, of course, but back here in June, we can start to look at this chart and see that the PAVE, the PAVE, has made a pretty good, gentle, and I like gentle, pretty good and gentle uptrend here. Went kind of sideways back here in August and September of 2020, last summer, then popped up a little bit, finally got his feet back on, moved up over the 20-day moving average, and moved into December of 2020, and then in January started getting a lot more energy to it, popped up, came back down below the 50-day, but only for 3 days, almost 4, but just right at the 50-day. Now it's starting to do a pretty decent walk up, and you do see more volume coming into the ETF in January. So I like the way this looks right here. So I'm going to do this. If in the coming week, and it probably will tomorrow, I hope, if the PAVE can remain above a 50-day moving average, and when I captured this chart today, the PAVE was trading at $24.24. The 50-day moving average is coming in here at $22.95. So in the coming week, if the PAVE can remain above this above the 50-day line, call it $23 to make it easy, I will add a small portion to my trading portfolio, and I'm going to put my initial stop at $22.70. Now, if the PAVE rises and keeps going and moves above which will become prior resistance here, if it can move above 25, and I believe that'll be an all-time high for the PAVE, I will add more shares to the position. And of course, by then my stop will be a trailing stop. So you may want to keep an eye on the PAVE, the PAVE, in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand, and they can help increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right here, or simply click on the orange button below. And now, on for final thoughts. Our question this week is, after exiting a losing trade, do I mentally bounce back into a nimble and confident mindset? After exiting a losing trade, do I bounce back to a nimble and confident mindset? Now, in one study, I found this interesting. In one study, high-performing equity traders in a large global bank, and that's a lot of pressure, defined mental toughness as the ability to perform at consistently high levels through times of personal and professional pressure. And certainly trading can be professional pressure. Now look, guys, we all, me included, we all feel badly after losing trades. To the degree, however, that you focus on your negative feelings after making a losing trade, at least in the short term, you will unconsciously sabotage your ability to make ongoing winning trades. And when you're in this negative mindset, you might even resort to revenge trades, making high-risk trades to get revenge on the market for losing your money. And most of us know how dangerous revenge trades can be. So when a losing trade gets you down, and again, it happens to all of us, please make sure you have hard protective stops set with your broker on your remaining positions. Then get away from the market, whether that means getting away from your computer or putting your phone down. Go for a walk or go do something constructive that has nothing to do with the market. Then, once you feel calm, go back to your losing trade. Try to do it without emotion and find the lesson in it. You have to learn from these things. That's how you get to where you don't do them again. Write down how and why the trade went against you and what steps you can take to eliminate anything that you did wrong. Then imagine, this is important, guys, imagine yourself experiencing a similar market move and acting in a way that minimizes losses or captures gains. In other words, watch yourself in the same type of situation, but turning it into, again, a very minimal loss or even a gain. Begin trading again only when you feel positive and clear-headed, and know you can trade from the calm, nimble, confident mindset you need to succeed. Got it? Finally, if you'd like to become a more successful trader, check out my trader training programs. To see all of my online training programs, simply go to the link on this screen at toniturner.com, again, or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.